Okay, welcome back. We got, 13 minutes to go for the pre-open session. Siddhartha Khemka is with us, the Motilal Oswal Financial Services, with what he'd want you to do in terms of specific stocks, etc. Sid, we've had a nice, decent bounce, right, from the lows. And hopefully, it stays on track. The two areas I want your thoughts. One is, of course, metals. The Nifty Metal Index is up some 10% from the lows 3 days back. And, of course, oil and gas. Reliance is starting to participate. That's up about 7% from the lows 2 days ago. Just your thoughts on ideas from these two spaces, if you have any, if you like anything.
Good morning, Prashant. I think, yes, these are the two spaces which are doing definitely much better than what the market has seen the recovery. And both have their own reasons. If you look at the oil and gas space, the crude oil, Brent crude falling below $70, that's a big positive. I think if you look at some of the OMCs, that's the preferred space within the oil and gas space. Given that with the fall in crude oil prices, I think the under recoveries will be under check, as well as the marketing margins that continues to remain pretty strong, currently at about 9 to 10 rupees per liter, while our expectation or forecast for FY26 is almost a 50 to 60% discount to these levels. So the probability of a much stronger FY26 numbers for both HPCL, BPCL into FY26, that remains pretty strong. Valuations are comfortable. Price to book have again discount to their long-term averages at around 1.2 times. And even dividend yield, that gives a little bit of comfort. So within the OMCs, we like HPCL, which is our preferred pick, where we have a target price of 490. The other one is BPCL, which is also likely to play out better with a comfortable valuation. Reliance is a dark horse because a lot of moving parts, but definitely I think it's time for Reliance to start participating, for the index to move from here. The overall setup looks good in terms of the crude oil prices. So the core business will start reporting better numbers. We have seen stability coming in the retail business, plus even on the telecom business.
No, I get that. Yesterday actually, except maybe if you look at what did well in terms of Nifty stocks, right? There was, if you can have these up, Asian Paints and Cipla were the only non-resource stocks which went higher. Otherwise, it was essentially Coal India, Hindalco, BPCL, NTPC, Reliance, Tata Steel. So all from the resource space. Any thoughts at all on the other underperforming areas, banking and financial services? Not very much momentum, even despite the RBI measures. And the other is IT services. These are both largely, large FII positioning, maybe something to do with that. But your views?
Yeah, definitely. I think the RBI's actions are positive. But if you look at banks, they have not fallen that much. Again, they are not moving up in line with the markets. So I think the rate cut cycle will be positive for NBFCs, which have started participating. We like the likes of Chola, Shriram Finance, M&M Finance. I think these are some of the stocks which should participate. Banks, we like SBI and ICICI. The problem with ICICI is the valuations a bit on the higher side compared to the market, and hence I think it would be in line with the market. So in-line performance could be seen. SBI is the other one where we could see some improvement on back of the credit growth that could come back in FY26. So the biggest challenge for banks is, yes, FIs have big stake and their consistent selling. That is leading to some pressure out there. The other sector was you asked?
Banks and IT services are the other area which was kind of underperformed lately.
Yeah. So the other sector, I think so banks clearly, I think, would remain in line with the market. NBFCs could outperform. IT services are again a mixed bag. While the rupee depreciation is positive, I think the bigger concern is right now the geopolitical, the global trade tariff war that is creating uncertainties with regards to the growth. Within that, I think the mid-cap IT space, that looks good. The likes of Persistent, Coforge, where they have consistently getting orders, delivery is strong. Large cap IT, I think, will take some time for recovery.